All business concerns can be divided into two categories, namely trading concern and non-trading concern. Basic distinction between trading and non-trading concern is that they have different reasons for their existence. Primary objective of a trading concern is to make and maximize profit for its owners through a sale of goods or rendering services to its customer. So while speaking about non-trading concern, it is to meet some socially desirable goal or to render services to its members. As the main objective of these concerns is to serve their members and not profit making. So these concerns are called as non-profit organizations. So non-trading concerns, which may include hospitals, educational institutions, sports clubs, political associations, religious institutions, charitable societies, etc. So these organizations are created for promotion of culture, games, sports, fine arts, etc. To elaborate further, a club provides recreational facilities through sports to its members. A hospital renders medical services to the society, and a literary society which may be arranging debates and seminar to provide recreation. All of these organizations, being non-profit seeking, they do not prepare profit and loss account. Even though they would like to know whether their current expenses are being met out of their current income. It is certainly proper that the current incomes, which may consist of fees or subscriptions, should be sufficient to meet the day to day expenses. Such organizations prepare an income and expenditure account which is more or less on line with the profit and loss account. So they also prepare profit and loss account, balance sheet, etc. So the final accounts of non-trading concerns usually will be consisting of receipts and payments account, income and expenditure account, and balance sheet. So while preparing receipts and payment account, so so it is simply we can call it as a summary of cash and bank transactions for a year. So this account starts with the beginning of balance of cash in hand and with bank on debit side of the receipts and payment account. It closes with the closing balance of cash and bank on the credit side. So only actual cash transactions are entered on this account. All the receipts of cash or checks are entered on the debit side, and all the payments made by cash or check are recorded on the credit side. So it is the nature of account is real account. All capital and revenue receipts like donations, subscriptions are entered on the debit side, and all the capital and revenue payments like purchase of furniture, payment of rent are entered on the credit side. The receipts and payments relating to the previous or future years are also to be included if the transactions take place during the period. The difference between the two sides will be representing cash in hand and cash at bank. The account cannot reveal profit or loss, but the cash positions at the end of the year can be ascertained. This account is very important from the point of view of non-profit organizations because they are more concerned about their cash position instead of surplus or deficit as shown by income and expenditure account. These organizations can achieve their objectives only when they have sufficient cash to execute their programs. Thus, non-profit organizations prepare receipts and payments account to throw light on their cash positions. So this is the format of receipts and payments account. So next we move on to the income and expenditure account. Income and expenditure account is prepared in lieu of profit and loss account and is prepared on the basis of standard accounting principles. The account is prepared for the current year or period from the receipts and payments account and has no relation to the previous and following period. All the revenue incomes for the current year are shown on the credit side of this account. Similarly, all the revenue expenses relating to the current year are entered on the debit side of the account. income received in advance or income relating to the account. Income received in advance relating to the previous year is excluded. Provisions is made for accrued income, that is, income earned during the period and not received. Expenditure of the previous year or subsequent year is also excluded. Provision is made for expenditure incurred but not paid. The opening and closing balance of cash and bank balances in receipts and payments account are also eliminated. So, depreciation, bad debts, etc., are brought into the account. Items of capital nature and the receipts and payments relating to the previous year or the following year are also excluded. So, income and expenditure account is considered as your nominal account, whereas receipts and payments was considered as a real account. Here it is a nominal account in nature. It is prepared at the end of the year. If the credit total exceeds debit total, the difference is called as the surplus, uh, or else we can call it as excess of income over expenditure. Uh, on the other hand, if the debit total exceeds credit total, the difference is a deficit and it is called as the excess of expenditure over income. So let's have a look at what are the steps to prepare while preparing your income and expenditure account. So what are the exclusions and inclusions? Let us discuss about this. So exclude all the opening and closing balance of cash and bank in receipts and payments account as they are balance sheet items. Exclude all capital receipts and capital payments. So you have to include only revenue receipts, which will be appearing on the credit side, like income side, and revenue in expenses on the debit side. So only the expenditure side of income and expenditure account. So next one is make all adjustments relating to prepaid or outstanding expenses, income accrued or received in advance, provisions for depreciation, etc. And the next step is take items only for the current period. Items relating to the preceding year and the succeeding year are to be ignored in the light of the following. So let us have that. Exclude incomes of the previous period or any income received in advance relating to the future period, and then provide for accrued income, that is income earned during the current period and not received. And the next thing is exclude expenditure either of the preceding period or of the succeeding period. And the next one is provide for expenditure due for the current period but not paid. And also you have to ascertain the difference which represents surplus or deficit. That should be the transfer this to the capital fund. That is the final one. So the balancing figure in the above account is either surplus or deficit, and it has to be merged with the capital fund in the balance sheet. Remember that. So before going to the balance sheet, let's discuss with the exercises which is given in the book. Exercise number 1, preparation of receipts and payments account. So here, cash in hand, cash at bank, subscriptions received, donations received, investment purchased, rent paid, general expenses, postage, sundry expenses, cash balance at close. So these are the details given here. Let's discuss. So you have to bring the balance of cash, balance of bank balances here, and then let's have subscriptions received during the year is 3,300, donations received is 260, and then we have investment purchased for 1,000 rupees and rent paid is 400 rupees. So general expenses is 210, postage 70, sundry expenses 30, balance of cash is given for 20 rupees. So after tallying this, you will be getting the answer that is called as your balance at closing bank balance. That comes about 2430. Okay. This is the second exercise. From the following details, you have to prepare receipts and payments account of the Chennai Sports Club for the year ended 31st December 1999. So opening balance is given here. Entrance fees, rent paid, stationery purchased, subscriptions for previous year, current year, and future year is given here. And then billiards table is purchased, wages paid, repairs and renewals, interest paid, donations, special subscriptions for annual day party. So the closing cash balance should come to 47,920. So this is the solution for this. So balance brought down is 6,000. Entrance fees, subscription for the previous year, current year, future year is also written here. So the donations comes about 10,000. Special subscription is 69,000, and then payment side, rent, stationery, billiards table purchased, wages, repair, interest paid. So after writing all the receipts and payments, the total of the sum is 4,44,000, and then the difference is 47,920. So that is the closing cash balance. Next, we move on to the preparation of income and expenditure account. Uh, I've done fourth exercise. So with the following information, you have to prepare for the exercise, that is preparation of income and expenditure account. Opening balance of bank is given. Subscriptions for all the years is like previous, current and future year is given here. Sale of investments, sale of old furniture. So book value is given here, and then 100 rupees less, 300 is given here. And then salaries, rent, stationery purchased, sorry, bicycle purchased, national serving certificate, saving certificate, help to needy students, bank balance. So these are the information given here. Additionally, you have subscriptions for 1997 still receivable were 700. Interest due on saving certificate is 100, and rent unpaid but due was 60. So let's go to the solution. So salaries, uh, rent is there, and then yeah, rent is 500, and then outstanding is 60 rupees. 60 rupees. Postage is 200. Help to needy students is 2000. Loss on sale of furniture is 400, is the amount which is given as book value, and then in the amount column it is given as 300. So 400 minus 300, 100 is written here. And then subscription, you have outstanding still receivable for the year 1997 is 700, so totally 9,000. And then one more adjustment, that is interest due on saving certificate is 100. So total of the receipts and pay sorry income and expenditure account is 9,100, and then difference is falling on the debit side, that is excess of income over expenditure, that is surplus. So this is the result. So next we move on to the next exercise, that is exercise number 5. So here also they have given the receipts and payments account. With the help of this information, you have to prepare the income and expenditure account. So balance is brought down, and entrance fees, donations. So all the receipts and payments are given here. So let's go to the, and we have additional information, that is entrance fees and donations are to be capitalized. So sports material are to be valued at 4,000. So expenditure, we have printing and stationery, newspaper, and then sports material is not taken here because it is a capitalized item. Depreciation on sports material alone is considered here. So sports material are valued at 4,000. Here it is 5,000. So the difference between 5,000 and 4,000, that is 1,000, which is given here. Repairs is 650, and then 1,500 for salaries. So other items will be considered as books and periodicals that may be considered as a capital items. So that will be coming under the income and expenditure. So here we have subscriptions, and then interest on investments, sale of newspaper, proceeds from entertainment, sundry receipts. So remaining and all, we won't be taking it. So the difference is 5,495. 5,495. So this is the surplus. Okay, thank you. Hope you all understood. Thank you.